Hello, and thank you for watching another one of Leverage Monkey's updates. This is for July 21st. We've had a little bounce from 2,900 ish to 31,700. Crypto Twitter's back to uh, saying that we're going back to all time high, even though we've only gone up like $1,000, not even $2,000. So I wanted to go over a little bit on the monthly chart. There's three different instances where RSI has hit uh, over 90. So there's this time over here, this time over here, and this time over here. If you see, each time there's been a decline in the RSI on the monthly down to about 45. Decline from 90 about to 45. The decline that we're doing now, we are at about 57. So there is still some more RSI that could be worked off. So Bitcoin could go lower. As you see, volume is dropping, which could be a sign of sellers exhausting or buyers not buying. Now I'll switch over to the daily and show you what I'm looking for the possible reversal that everybody on crypto Twitter is hoping for. Here is the RSI. As you can see, um, it has been declining for quite some time. This is not very new or recent. If you see, it peaked right about there on the daily. June 8th is when the RSI peaked and started its decline. Also, volume is a good indicator. You see volume has been declining as well, this whole drop. And now we have a little pickup in volume here, right here. So we have these three candles. The volume is declining. We have these three bigger candles. So we're getting a little bit more volume, but if you look, the first two candles were red, and this one is green. Doesn't necessarily mean that it's going to close green. A green or red candle is just depends on whether there was more buyers than sellers. Of course, for every buyer there is a sell, but it has to do with whether they bought or sold on the bid or the ask price is whether it's considered a buy or sell for those people that are new. So right now, Bitcoin is coming up. I have the green line here. It's the 10-day. It's coming up and it's touching the 10-day. The orange line is the 30-day. So what I'm looking for, because I know I've said in the past, there is a wedge here that I drew out the other day for you guys. Here's a wedge pattern. I mean, there's so many different ways people can draw it. They can draw a wedge. They can draw a channel. They can do pretty much whatever they want. So you have the wedge here. So we have this wedge that I showed you the other day. It still has another 6 days that it could stay in. It popped back in. It's currently headed to test the top of it. and a breakout above that, which I believe is somewhere around 32,000, would be a break above that. But that's not only what I'm looking for. I'm looking for the RSI to go above its long-term trend line. I'm looking for more volume and more buy volume, which we have, it looks like we possibly have right now. And then also I'm looking for the green line, which is the 10-day moving average, and the orange line, which is the 30-day moving average. The green line needs to cross the orange line. The 10-day needs to cross the 30-day. That is a somewhat short-term indicator of a trend reversal. Is most of the time the 30-day is not really significant. When the 30-day, um, it doesn't really act as support and resistance at all. Really, it doesn't. But when the 10-day crosses the 30-day, whether it crosses it up or down, it's a good indicator of short-term movement. You're going to want to look for the 50 to and 200-day cross for it to be a more longer trend. But if you're looking for a shorter term, because maybe you're a swing trader, the 10 and the 30-day crossing is what you're going to want to look for. So I'm looking for more buy volume above the RSI, above the long-term downtrend, looking for the 10 and 30-day to cross. Then I will consider putting on a position. To keep myself out of fake outs and different things like that, the LPSYs, as you know, the LPSYs happen after a SOW, a show of weakness. So the last point supply happens after the show of weakness. So that could be what we're getting right now. We could be getting a bounce from the show of weakness to the LPSY and create another LPSY before we head down lower. So to stay out of fake outs, the RSI, the volume with buy volume. Of course, I'm on the daily now. I'll switch down to lower time frame as well to see what the buy volume is and the sell volume is, and make my judgment there. I'm not going to sit here at the 1 day. I will for my buy, but as far as jumping in early or anything like that, I want to stay outside of the traps that they set. They shoot it up, trap a bunch of people, and then they yank it back down. I want to stay just outside their range of them doing that. And so these are some of the criteria that I've come up with. I don't mind missing out on $2,000, $5,000 of the rally. That doesn't bother me. I am looking for, in Bitcoin and Ethereum making 5-6%, 6x return. So if I lose, $5,000 worth of the beginning of the rally, but I can stay out of these traps. If I didn't do this, I would have probably had bought up here, and I'd be stuck up here or somewhere in here now, or took a loss, like a bunch of people. So I keep my range just above where they're gonna go. If this is a lasting downtrend, this RSI should continue to hold. If this is a lasting downtrend, the 10 really shouldn't go above the 30. If you notice this entire time, the 10 has never gone over the 30. They're getting closer now. So a reversal is possible. But if you've noticed, usually there's one fake out here where it came down, it crossed, came down, it crossed again, and then it crossed again. So there is times where if you follow this 10 and 30, you will put back on a position just to have it trigger your stop loss. But if you notice, that doesn't happen very often. This entire time, the 10-day has been above the 30. these 3 touches here have been the only time that you would have put on, take off, lost, a couple percent in your stop losses. The rest of the time, you would have got all this gravy, all this froth, and then now you would be avoiding all of this all the way down. So that is what I'm looking at, the 10 crossing the 30. If you guys want to use this, or, I didn't come up with this. I definitely didn't come up with this, but if you guys want to use this, it seems to be working quite well on Bitcoin right now. In the entire time it's worked, except for right here, where people were getting tossed around anyways and tricked out anyways. That's the only time you would have put on position, took it back off, put it back on, took it back off. Those 3 chops right there. The rest of the time you would have made all this money. You would have lost a little bit in stop losses here, but the rest of the money that you would have made, it would have been well worth it. And the rest of the money you would have saved, not dollar cost averaging. They talk about holders. In stocks, they call it pay and pray. And people say trading is impossible and all this stuff. It really is not. They say trading profitable is impossible, is not consistently is impossible. It's really not. It's what indicators you use, not over complicating your strategy, but using the correct indicators. And so you can put on all the indicators and patterns and stuff you want and see what you want to see, because literally technical analysis will show you every possibility that could possibly happen if you look for it. And so you can see literally anything you want with technical analysis. And that's why they say it doesn't work. It's tea leaf reading. You just have to find out what really works and what doesn't, and keep your craft, simple. This 10 and 30-day cross, whoever did it, I mean, this is as simple as it comes, the 10-day and the 30-day EMA crossing. And you would have only been tricked up here 3 times. One there, one there, and one there. The rest of the time you would have made all this money long going up, all this money short going down, and you would have been able to accumulate pretty close to the bottom. So yeah, the 10 and 30-day cross is a pretty good indicator. Also, the long-term RSI going down is a good indicator, and volume. I mean, you could literally keep it that simple on the daily if you really wanted to swing trade that way with just what I showed you there. It could literally be that simple, and you would make money as long as you had your stop losses in and your position size correctly. You could have literally made money this whole time with just volume, long-term RSI, and the 10 and 30 day. Going long here, selling out here, re-putting your position on a few times, kind of annoying. I lost some money in some stop losses, but then shorted and came all the way down here with profit. Wait here for it to cross again, to go long again, to go back up. Maybe it will trick you 2 or 3 times here, and you'll lose some money in the stop losses. But the amount of money you would have gained the entire time, you would have made a lot of money. So that's the end of my analysis for 721. That's what I'm looking for. Not looking to get messed up like this. There could be this cut type of situation here that takes place. The crossings and the fake outs, and we could go lower, or it could be the crossings and the fake outs and could go higher. This could happen again here. It's quite possible. Of course, anything's possible. So I'm trying to stay above them trapping me in if they're going to take this down lower. I'm not going to be trapped in there with my money. I'm not going to fall for their trickery. So that's the update for 721. Thank you for watching. Subscribe, like, follow me. Thank you. Have a great day. Bye.